2023 was the year of the trap. It trapped the unsuspecting investors into thinking that the markets would collapse. Recessions were here, money printing was in excess, inflation was rampant, interest rates were rising, wars were breaking out, debt ceiling crisis were happening, banking crisis were happening, and now we find ourselves at new all-time high yearly closing prices. Today's video, let's have a look at the traps that have been set, the trap that is forming on Bitcoin, and you are most welcome to take a shot every time I say the word trap in today's video. You know where you are. You're on the home of macro cycle analysis, where we study the past to forecast the future across the stock markets, commodities, Bitcoin, cryptos, real estate. Hopefully I've covered them all, because this is what we do on the channel. Links in the top of the video description for our end of year sale. Subscribe to the free TIA report and you will go on that list right now. I'll cover these later in the video, but let's get started with probably one of my most favorite quotes when it comes to the markets, because essentially they go up roughly 75% of the time. That is 3 out of 4 years markets go up. Markets can remain irrational longer than you can remain solvent. And I think this year has shown that very, very clearly. The irrational behavior of the markets heading up, despite everything that I listed in the intro, plus many, many more reasons, shows that they can remain irrational longer than we can remain solvent. And this goes a long way to explaining where we are in the real estate cycle. So looking at the 18.6 year real estate cycle, we are roughly in this stage of the cycle. So heading up into this last half. These last couple of years are the craziest years. So never forget this particular quote when we start to see the markets go even more ballistic later in 24 and 25, at least according to my own analysis. And of course, you can make up your own analysis along the way. I'm just presenting you with the data and the facts and then collating them into the way that I see the markets. So that's what I'm looking at over the next couple of years. We have had a nice closeout of the markets across the world at the end of 2023. And we're waiting just 2 more days now for Bitcoin and cryptos. And we can see that trap being set for BTC. It's had a phenomenal run, and I think we're seeing that trap being set right now. So remember this, markets can remain irrational longer than you can remain solvent. And that is basically looking at markets going up. And then of course, when we think that they are going to fall, they can keep falling further than what we anticipate. So I posed this question on Twitter yesterday, or X if you get triggered by calling it Twitter now. This is looking at a massive trap forming on Bitcoin. We're looking at the 50% level, again, 50% level of the bear market range. You can see from the all-time high to the low, and every single cycle, the same thing has happened. Is it going to happen again? I think so, but the rhyme is that it won't happen the same way as what happened in the past. From this post yesterday, a lot thought that I was expecting a major collapse for BTC, some sort of black swan pandemic event later in 2024, but I don't think that's the case. The main point here is to watch this 50% level, which we'll get into in detail in just a moment. But let's have a look at how these years have ended. It is the end, closed, 2023 done for the stock markets. And what we can see, in particular for the SPX, is that we had a new all-time high close on the yearly chart. The SPX has never closed this high in its entire history. As I was going through my analysis of the macro time frame for the SPX, there was one major thing I noticed here, and in its history, only once has this occurred. We've seen a green year, red year, green year, then a red year. So just remember that when we're hearing about recessions and interest rates dropping. I suspect the narratives will shift, but there will be something that the bears will try and tell us that has to be a reason for why the market should collapse in 2024. And that one time occurred back in the 60s. So since the end of World War II, it's only happened once in its history, where we've seen green, red, green, red. You can see from the rest of these years, it's basically been red, then at least 2 green years in a row before you get another red. And typically, if there was another red, and it's not the end of the cycle here, then you can see that that red hasn't been extremely significant. The only time that it has been extremely significant in the broad picture, of course, has been the .com collapse. Even the GFC had one red year before it went green, green, and then basically this red was almost non-existent. There was only a few, well, it basically says 0 here at the top where you can see the open and the close. So it was essentially a flat year. You could almost call it a green year. Green, 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 tiny red again, not even 1% difference. Green, green, red, only 6% difference. Green, 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 red here was 19.4%. So it's pretty much the most significant red year was 2022 that we had had since the GFC. Of course, in the future, anything can happen. We always have to remember that. But if we're looking at the data from the past, well, we would probably say that we're most likely going to see a green year. That is obviously bullish for the rest of the markets. Before we get too far, let's have a look at the rest of these traps that had formed on the S&P 500. We've seen the highest monthly close in history, the highest yearly close in history for the futures contract. The traps have basically been the bottoms. We had significant fear at the cycle low in September and October of 2022. It was inflation, it was interest rates, it was anything that the media could tell us about. And I've seen some comments, people saying that I give the media too much pressure or I give them too much crap. Well, essentially, they've been wrong the entire time. So if you want someone to go easy on the media, maybe go and watch the media. If you want to see where the markets are going, then obviously check out the cycles and understand how to read a chart. So the next low here was the banking crisis, the crisis that everyone told us had to collapse the markets. That was a huge, mega trap because the majority thought it was going to collapse and probably kept a lot of people out of the markets, especially in Bitcoin. Then we had the October trap, and that was a pretty significant one. Personally, I felt like October was the most difficult one to read. We had 3 months down. We had the market testing the previous resistance levels, and then from November, it just went ballistic from that point, and we've seen all-time highs on almost every single market, including the NASDAQ. The NASDAQ has been up very, very significantly over this whole year. From the low to the high, we did 63%. To the closing price is 62% from that October low. So it's been a massive 14 or so months for the NASDAQ. It is now up 4% from the last yearly close. So from one year to the next, it's up 4%. Think about that when you're looking at the all-time high prices here and all-time high closes, a pretty significant move after a mega drop in 2022. The Dow Jones, all-time high territory. It's getting stumped now at the 50% level of this range. So we've got that to contend with. We'd want to see this close above over the next couple of months, over 38,000, but you can see it just got rejected by 40 points, just a small 40 points there on the monthly close. So that could lead to some pause in the prices in this first quarter, maybe first half of 2024, which is something that we've looked at for quite some time now. So that's looking at the US markets. Every single one of them have closed in new all-time high territory. For the yearly charts, monthly charts, things are looking very, very positive. And as I pointed out with this piece of data here, only once in history has the market done a red year the following green year after a red year. Basically, red, green, red. All right, let's move on to the rest of the world as I've got a few minorities to get through just briefly. So if you are American, check out what's going on around the rest of the world because you'll see that everything else is not doing too bad after all. Australia, new all-time high closing price on the monthly chart and on the yearly chart. Not there just yet on the price, but it's less than 1% from a new all-time high price. Potentially will happen in January if the US also continues up as well. But overall, new all-time high prices on the monthly and yearly chart, the closes there. Now, our other minorities, UK, Canada, Netherlands. How's it going over there in Canada? It's getting very close to another new all-time high. It's just 6% off, so probably the weakest out of the lot, but it is creeping up and is closed above that previous resistance level. Things had seemed a little bit worse in Canada over the past several months. I heard a lot of talk about the property prices being down, but you can see here that these markets are heading up despite what the media is telling us. And the same deal for the UK. It is also within striking distance of a new all-time high price. The monthly is very close there. And in terms of the annual close, the highest in history. Now for the Dutch friends, all I've got here is the Euro 50. It is a new all-time, 22-year high when it comes to the yearly close and the monthly close. You have to go all the way back to to 2000 to get a highest close. So you could say 23 years there, but in terms of the monthly, it's roughly 22 years. So 22-year high for the top 50 in Europe. So all is seeming good all around the world, new all-time high closing prices. And when we do move into all-time high prices, markets can remain irrational longer than we can remain solvent. And another thing that Gann notes is that when markets break out into new all-time high territory, there's just no way of knowing exactly where they're going to end up. And when they break through those tops, things can get really crazy, which is why I do bring up that quote so often, is that things can go ballistic. It just probably won't make sense why these markets are so high. Media and so on are going to try and tell us why they should be that high, but things can get very, very irrational. And we should know that because of crypto and Bitcoin. Things can get extremely irrational. Why any of these cryptocurrencies or altcoins, shitcoins are worth so much, absolutely beyond me. Of course, there are going to be the lovers, those who are married to their altcoins that will tell us why they need to be worth that much. But of course, that just triggers them to try and explain themselves. We don't need that. Just make money from the markets. Who cares about what they do? They're not going to care. If you've seen 2021, they basically scam everyone anyway. Let's just make money from them and move on. Now, the trap here. I hope you're keeping track of how many shots you need to take when we're talking about traps. Looking at Bitcoin and the 50% level. Now, as I said, I'd posed this on Twitter. So let's bring this down here and have a look. We're looking at the 50% level and how long it's taken to overcome this 50% level. Now, this has been a big one that I've been following on the channel because it can trap us into thinking that this market just has so much strength to go because of the media and the narratives that are coming up. In about less than 2 weeks now, we've got the ETF deadlines. Now, if the ETFs are delayed, well, that would be your explanation as to why the market potentially moves down. If they are approved, well, then there could be a buy the rumor, sell the event type of movement as well. Because what we're seeing at the moment is the price just coming back under 42.2. Now, the monthly has not closed yet. There are 2 more days left. So when I make my next video, we'll get the absolute answer to this one here. But I dare say it's probably not going to be very convincing, even if it is a close above the 50% level, that this market is ready to continue powering on, taking out 48, taking out 50K, and then eventually taking out 69 until it's time, until we get a bit of a correction, some time to digest this significant move. That does not mean that I think the market is going to collapse. I don't even think it's going to break down past 30,000. Just throwing that out there. You don't have to live by it or die by it. If things change, then definitely change your view on the market. But at the moment, it doesn't seem like we'll get such a significant breakdown into this previous zone based on the strength to the upside. And we can look back at the previous cycle, which I think we are following mostly, which comes back to 2016. We had that first attempt, and then we had the halving, we had the pullback to test the tops of that previous accumulation area or reaccumulation because the accumulation was prior to that. And then we finally got the breakout on the second attempt. There was the test, and then here is your breakout in November of 2016, which also coincided with the election, the actual election month of the US. So from that point, markets went absolutely ballistic. So it seems like there could be a little more time left for that. Going back to the 2019-2020 cycle, this did not even break down into the previous accumulation zone. The only thing that got it close was a worldwide pandemic. And unless you're banking on the hopes of another worldwide pandemic, that might be your only savior to getting prices back down into those significant zones, probably at least back under that 25K level. So even the previous cycle had 2 attempts at cracking the 50% level. The first failed, and you can see the monthly close was underneath that 50%. It went back up and tested that level again. It got back above 50% on the daily and the weekly, but then when that month came in July, it closed back under it. Then again, it happened in August. It went back above the 50% level, and then by the end of the month, it closed under it, and then we didn't see that 50% level again until we got to July of 2020. You had the halving just before that period. You had the test, a small close above, a rejection, and then the market was finally ready to go. You've got October and then the election month, November 2020. So this time now, looking at the month timeframes here, looking at the span here, that was 22 months from the low to the final breakout month where it actually broke out and did not come back. Same deal for the previous cycle. You can see we had 22 months from the cycle low to the point where the market broke out and did not come back to test those levels. Again, it was 22 months. 22 months sits this market somewhere out around September. So that comes pretty damn close into the presidential election again, which is scheduled for November 2024. So there are still several questions left unanswered. Is 45K the intermediate top, not the final top, not the top for the cycle, but just the intermediate top? How and what does that next correction look like if in fact we get a correction? And then will that correction form and time similar to the previous cycles, whereby it takes 22 months to finally break out on roughly that second attempt of cracking the 50% level? So there's still some pretty decent questions to be answered here. And of course, if you haven't bought any BTC, you would be hoping and waiting for the market to go back down. And if you have entered all your positions, your Bitcoin, your crypto, your ETH, whatever it is, then all you want to see is the markets just skyrocket and do your 10, 20 X's so you can get out. But for now, we don't have an answer on that. And it seems like we're still following similar paths to the last two cycles. Something that would be different, but essentially I would call it a rhyme because it's still a correction, which is the same, but the rhyming is the depth of the correction. The depth of the correction in 2019 was 53%, except for the COVID pandemic. So if we include the pandemic, 72%. Now, if we saw a previous correction like we did in 2016, you got roughly 40%, or going back to the previous one here, the most it dropped was around 31%. But considering we've only done 20 to 22% this cycle so far, it might be a little bit of a stretch to think we would get something like a 54 or a 72% like we did in 2019 and 2020. So maybe somewhere between that 20 and 30% could be a reasonable area, maybe extreme considering we've only done 22%. So if we did go out to 30 or 32% like the previous cycle, that would sit us somewhere back down around $30,000. But I'm not hoping and waiting for the market to get there. We'll obviously follow what the trends and the patterns are doing on the way to that price, if in fact it does get there. But of course, the timing is the most important. So we want to see how this progresses over the first half of 2024. The Wyckoff schematic could also have some clues as to where the market would correct to. Typically, you wouldn't see a phase E drop back into a phase D. So if this is phase D, then we probably won't see the prices drop back under 30, 31,000, or at least close under there on something like a weekly basis. So there could be wicks. Of course, we know sometimes these markets become pretty illiquid and they can flush out either end of the buyers or sellers. So we've got to keep that in mind. But essentially, if we are looking at those price ranges like we looked at just earlier, around that sort of 20 to 22% would sit you somewhere between $34,000 and $36,000. And if we want to get a little bit more extreme, going down to 30%, well, like I said before, roughly 30 to 31,000. And that would still keep us within the rules of the Wyckoff schematic of these being phase D and then phase E, where the market breaks out, puts in a correction, consolidates, a stepping stone, a reaccumulation, and then continues to take off to further and higher prices. Now, ETH is the interesting one to have a look at over the next 12 months. You can see that we are sitting at relatively similar areas to where we were in the last cycle, where it's broken down to come and test where the US dollar low was. Now, this is the Ethereum Bitcoin chart, and the prices are pretty similar considering where we were in the last cycle. However, this cycle has only seen a decline, and I say only, it's still a significant number. It's only seen a decline of 44% against its BTC value from the peak to the absolute trough so far. In the last cycle, it went from its peak to the low, which was 90%. So it's done roughly half the decline this cycle, which seems pretty strong considering where it's come from and the strength of Bitcoin over the last two cycles. Now, the next 12 months is going to be a very important one for this chart. You can see over the last cycle, the 12 months there was underneath the US dollar low. This time round, we might not have 12 more months to accumulate ETH underneath that USD low. So if this doesn't occur, if we don't see a breakdown underneath these levels, then I'd be watching for an accumulation at these levels. Or at a best case scenario, you might even see ETH climb back and close above the 6% level and start to accumulate at higher prices again, which would basically put in some sort of double bottom here for the ETH BTC pairing. So what happens for cryptocurrencies? Well, they look like they have gone through their Wyckoff schematic and they're heading into phase E after we get some consolidation in phase D. So that's where I'm looking at up here. You can see we've seen some signs of strength. We've seen last points of supply along the way where the market has basically scooped up every last crypto for that space and then broken out to higher prices. Now, this particular chart at the top here is the total cryptocurrency market cap, including stablecoins, but excluding Bitcoin and ETH. Now we've got a custom indicator where I'll just hide this. And this indicator down here is just the total cryptocurrency market cap, which you can exclude the BTC and ETH and also exclude all the stable coins, something that the TradingView chart doesn't do. So if you want access to that, check out the 7-day free trial of the Gann swing indicator, and there'll be a suite of indicators within that link there. So back to the total cryptocurrency market cap, you can see that we have gone on a pretty significant move. Now I'm using the TIA crypto market cap here that excludes all the stable coins as well. Just gives us a cleaner reading of what's going on in the market. So if we do see that, we see a phase D into a phase E, well, some point along the way here, coming up soon, who knows, right? We would expect some sort of pause and correction where the market would most likely consolidate above previous high levels. That's what you want to see for a continuation of the bull market sometime into late 2024, some time for the market to rest, recuperate, digest the significant move that has happened, for significant profits to be taken, which is absolutely okay. And we have started to see that across some of people's favorite altcoins, like the case of Solana. So here is the weekly chart of Solana. You can see the market had run up, and then on the daily here, we have had a few days to the downside with another attempt now trying to break back to the upside. So keep a watch out for these tops on any of your significant altcoin bags that you are following, because if you don't see a breakout of these tops, it could be a distribution pattern forming. Now, I don't want to bang on about that too much because some people get really triggered to think that their altcoin could fall, but I mean, that's just the nature of the game. You just have accumulation, distribution, accumulation, distribution. That's basically just trading. It shouldn't be so emotional. It should just basically be mechanical. Now, I've got one last thing for you, and I want to hear from you in the comment section down below, the pinned comment there. I want to hear about your popular opinions that you're hearing about in the media, maybe from your friends, maybe from other analysts out there, popular stuff that they think is going to happen in 2024. Last year's unpopular opinions went off with a bang. S&P was bottoming. We got that. Europe didn't freeze. It was a big thing at the time. Now no one gives an absolute flute about what's going on with Europe and their freeze. Last winter for Europe was actually pretty warm. Real estate is not going to crash in 2023. In fact, we saw it rocket in US and Australia. And I say rocket, I mean, it's been up for 9 straight months and it's back at previous highs of 2021. That's pretty damn good. Second half of 2022 and first half of 2023 were buying opportunities. Well, that just happened. And remember, I posted this at the end of 2022. Bitcoin was bottoming at the time, and most crypto were terrible DCAs. Some were absolutely amazing. And if you guys got those, congratulations to you. Fantastic gains there were to be had. Now, I want to hear from you guys in the comment section. What do you think are the most popular opinions? And I want to put out another unpopular opinions tweet and let you know about it also here on YouTube and see if we can do pretty well again next year. Thanks once again, guys. Happy New Year. Hope you had a fantastic Christmas as well. But I'll see you probably in the new year if I can hold back from doing a video tomorrow. Until then, take care and peace out.